Hi guys, this is Pradeep. So today I am going to start R2R series, which is also known as record to report. Already you have seen some videos in P2P, O2C, although I need to add some more videos in that so that it will help you for your preparation point of view. And coming to this R2R or record to report, this one is comparatively P2P or O2C, if you'll see, this is most high demanding job. So this is very suitable for the candidates having like if you are let's say qualified chartered accountant, and even if you are semi qualified also, in that also in this area you can explore. Whether you are going to be consulting or business analyst or any role, always you will find that R2R or record to report is high profile job, because here in R2R we are going to do entire business analyst. Everything you will find that in this particular series, everything will be part of this one. So before going to directly jump into the R2R, it is highly required. As I said, it is suitable for the middle management. So you should know all the components related to R2R. So what are the parameters are there, or what are the components are there? Then gradually we will come to the areas where actually you are going to work. So coming to this particular PPT, if you'll see, this is already you know that so what is R2R, record to report? So in record to report means starting from a transaction till all the month end activities, year end activity, your adjustments, everything. So all your external reporting basically we are going to handle here. Right, if you will see this particular PPT, you will find that this includes our general ledger accounting. So general ledger accounting, what components or what is there, that we will see. This is nothing but your balance sheet, your income statement, your accounts payable. You must be thinking that accounts payable is part of P2P process, correct? P2P process is entire, like when we are saying that finance integrated with the logistic, but finance point of view, the core payable part is your accounts payable. So that is also indirectly part of accounts payable, part of a record to report, that also we will see. This also accounts receivable again part of your order to cash O2C cycle. So if you'll see that my other series O2C, that includes the sales activities, but particularly if you'll see the receivable part, that is your collection, which is part of your finance. Then we will see how it is connected with your R2R. This also includes asset accounting, fixed asset accounting. So this also include your bank accounting. So you can see this in this particular diagram, everything is included, starting from your general ledger accounting till your adjustments, your bank accounting, your asset, everything covers here under this record to report or R2R. So if I will show you one profit and loss and balance sheet, which of course designed by the consultant, means we already configured that one, but as a business user, suppose you are going to run it, the balance sheet. So again, when I'm going to show you the balance sheet, like this is just a dummy balance sheet I have created for your presentation point of view, but in reality all these components will be there. But this particular balance sheet, income statement, which in SAP language we are saying that FSV, financial statement version, that is again part of your record to report. So let's check that in the system. So now I'm in SAP system and we are going to run one balance sheet and income statement, which is combiningly we are going to get here. So as per the accounting rules, so balance sheet must be tallied. So let's see whether it is going to tallied. So who is going to prepare this balance sheet? The configuration part will be handled by the consultant. If I am the let's say my role is I'm business analyst and I want to see the balance sheet, all the components related to income statement, I want to see the loss, profit, everything, I want to analyze all this. So it is all part of your record to report. When you are working in any manual environment, so that time you are doing the trial balance, you are doing adjustments, you are preparing your income statement and balance sheet. But in benefit of using any particular advanced application like your SAP, so everything is automated. So I am not going to do anything. I will get the ready-made report which is designed by the consultant, and I'm going to do my job, or I'm going to do the analysis. So let's run it. So this is the front end part. Already if you are familiar with SAP, you know that this is front end part, and in this front end I'm going to see this is general ledger. So it is core area, you can say it is part of general ledger, it is linked with general ledger, but it's not only general ledger. So obviously in SAP point of view they have given this node in this particular segment, but you will find that everything included here, because each component also we will see in our sub ledger tools. And before that I need to show you what is the concept of sub ledger. Okay, so let's run the report. So general ledger, and I will go to the info segment or information system. Here I am going to see my profit and loss balance sheet, which is known as your FSB, financial statement balance sheet. No need to worry how we got this balance. So we will properly record the transactions, we will see the balances. So in this series you will find good number of videos are there, so that systematically we will learn, but this is just overview in this particular R2R. If I will start recording the transactions, if you are not familiar with the business process, maybe for those participants or for those viewers it will be difficult. So that's why I'm just giving a background. So if we'll go to here and we will run that particular report. So now I got my screen here and I am going to record the required chart of account. Again, no need to worry, I will explain what is chart of account if someone is not from SAP background. And for my company code, I am going to run the report, and I selected here my entity, which is company code. We are saying that, then again your wish in which ledger you are going to run. So again, something here it is there, parallel accounting with multiple ledger. Again, this is technical, it is for consultant point of view or consultant it is required. But if I am the business analyst, so basically I want to see if we are working on different accounting principles. For example, we are working on IFRS, we are working on US GAAP, we are working on local GAAP. So on different income tax point of view, we are following certain standards, accounting standards. So on that basis, I want to see my different reports. So I'm going to show you in two different reports, or I mean two different accounting principles, or in two different ledger what we are saying. So if you are familiar with the ledger, you can connect my example. What is ledger? That means leading and non-leading ledger I'm going to show you. But again, if business process point of view you are trying to understand, then no need to worry about the ledger. Ledger particularly, that is not the user area, that is handled by the consultant, but consultant, they did the particular task is easy, so that user will analyze their report and they will get their information very quickly. So I'm going to take here the leading ledger 0L. Now when you are going to work in any R2R profile, so do we need to learn the ledger? Not required. When you will get your KT or when you will get your training, initial training from the company, they will give you the training, like what are the ledger they are using. But in every company you will find the default ledger as leading ledger. So what the accounting principle they have connected with the leading ledger, and what are the other ledgers they have configured as per their requirement. So it is important, very important for the consulting job, but business analyst point of view, particularly the ledger is not important. You will get this information. Now here this version you need to select. Now again, you will get this information, what is the version which is designed by the consultant. So that means in backend I configured that one and I'm going to run it. Finance statement version I created here Z300, and I want to see here the reporting period, from which period to which period. So let's not include here the special periods. So anyone not familiar with the special period configuration, they will get confused here. So let's take that 12. So that means I want to see the reports from my first period to 12. That means the entire financial year 2023 I want to see, and let's say April to March I want to see the report. If I want to do a comparison with my previous year, that I can include here, or which year I want to do a comparison I can include. But just demonstration purpose, you may ignore this comparison part. So we will only see the current one. Now here you can see quickly some data I got here as the consultant configured for me, means in backend I configured. So what is our thumb rule for the accounting point of view? So the balance sheet should be tally, right? So the balance sheet means your asset and liability should be tally. Let's ignore this one for the timing. So this is our income statement, just hold it. Now coming to this liability and asset. So accounting thumb rule is the asset equal to liability or the total balance sheet, then only we will say that balance sheet is matched. So here liability should be credit balance. So you can see here 11,846.50 it is there, and minus means it is credit, or you can say liability 1. Then asset debit balance, so that is also 11,840.50. How I got this balance? All before this automatically system completed the trial balance and I got all the closing balance. So if I will check my individual account balance, you will find that it should be the same. But as here everything is happening automated, or the configuration part is done by the consulting or development team. So that's why we are getting this report, and now our job is to do the analysis. Now in assets I can see that different components are there. So whatever your wish, anything you want to add, you can create your note. But again, that is again handled by the consultant development point of view. So assume that the consultant created two nodes mainly. One is fixed asset and another one is current asset. Again, in fixed asset, some more informations are there. So these are my different assets under fixed assets. And here I have adjusted the accumulated depreciation. So I guess you are familiar with the accumulated depreciation, which is my carry forward balance of depreciation, and these are my your assets, fixed asset. So fixed asset adjusted with our accumulated depreciation, and then finally we got the balance. Similarly, if I will go to the current asset, you can see some more nodes are there. All this in backend I design. So this includes my cash and equivalent, means my bank balance, all this will be there. So you must be thinking how this bank or this cash is having the negative balance. Just ignore it, because randomly I posted different transactions. So just ignore it. So that is why cash can't be a negative balance. Maybe you need to ignore this one, right? But if you check this bank balance, that is 378520. So this 378520 means it is my reconciled balance in the bank. So before this FSB, before preparation of this balance sheet, it is also the user who is handling this part. So one component was their bank accounting under this R2R. So it is their job or that team job that they have to complete the reconciliation part, which we have something called EBS. So right now this particular node is giving me that in this particular account, so this Citibank account is showing a closing balance of 378520. So that means if on this particular date, if we will check our bank statement, then that bank statement should be, this balance should be there. And right now if I am going to check in our SAP system, this is the output. If I will check my SAP bank account or the particular GL master related to what is the bank balance, that should be this there. So then system is going to pick the data, and it should be the reconciled one. Let's cross check it. Now you can see I just selected the GL account 1001, and I want to see here my closing balance of this particular GL account if it is reconciled. Now here these transactions, no user posted here. The transactions, we know that banking, through bank what we are doing, either we are doing the collection, we are doing payment. So banking activities we are doing. So payable team is going to do they are going to do the payment, collection team is doing the collection. So when they are going to perform their activities in the concerned department, automatically the other clearing accounts are going to be updated, and the R2R team is going to do the EBS reconciliation, or they are going to do the bank reconciliation. After that, this balance will be there. So in end you will find that R2R is connected with everything. So right now what we are doing, we are moving towards banking team. Now banking team is closely connected with your receivable and payable. So that's why initially when I was showing the diagram, that R2R covers everything. It is directly, indirectly connected with each other, right? So this is the closing balance 378520, and same is there in this particular balance sheet. So if you check any item, just sample, I just pick this item, you check any item, you will find that the corresponding transactions are there or balances are there. So that is why always R2R profile is comparatively high packaging jobs are there, or senior people used to work on this particular R2R. Okay, so this is different like nodes are there. In future we will see all this, but right now just I am giving overview. So this is my receivables, account receivable. Now if I will check my customers, my reconciliation, it will be same. So inventory also it is there, right? So this is how my liabilities are there, equity balance is there, then current liability, again some more nodes are there. So you know already what are the different components are there in your balance sheet and assets. Now another important thing is your income statement. So income statement is nothing but the profit or loss. So you are going to have a profit or loss. So under this income statement you will find again your expenditures, your revenues, net result. So under net result, either it will be profit or it will be loss. Okay, so this is my total income, and this is our expenditure. Again, you have to ignore, as I said, I randomly posted different transactions, so that's why you will find that it is expenditure is more than revenue, and here it is loss. So net result, you will find that it is calculated result is what? It is minus figure, means it's loss. So it's simple, you can see revenue is less and expenditures are more, and if you calculate this one, this is your loss figure. And as per the technicality, the loss should be added with your owner's equity, right? So with your equity fund. So if I will check my liability and equity, so it should be the same. You can see the same figure is there. Here no equity is, it's not there, just same balance is carry forward. Now I have not done anything because I just executed this report in front of you. So I have not done anything. As per this backend configuration, automatically system carry forward this loss with your equity. So if it is profit, then it will be added with your equity. So this is the benefit of your SAP or any integrated applications or any ERP, so that a lot of things will be automated. So this is our report as as per one accounting principle, right? So it is as per the ledger. So we have configured this ledger, and I know that this one I connected with one accounting principle. On that basis, we got this information. Now let's say another team, they are working on another accounting principle, right? So they are working on another ledger. So if I will select that one, let's see what will be the outcome here. Just I pick the same information. Now this figure something different here, right? So last time the loss net result something was different here. That means we are working on parallel accounting, and this is a different accounting principle. So that's why here the figure is different. So parallelly we can use on different books of accounts. So when users are going to record the transactions, they can select the different ledgers which already configured by the consultant, and they are going to post different transactions. And all these are part of this series R2R. So okay, so here you can see the hierarchy. This one, before coming to SAP, let's check here. So when you are going to work in particularly management, middle management, so that time, and what will be the profile, like the chartered accountants, the cost accountants. So this will be there, maybe qualified, semi-qualified, depends on the company or company size. So basically I'm going to consider both in the same criteria, qualified chartered accountants and semi-qualified chartered accountant, and cost accountant semi-qualified. If you are chartered accountant, so basically your role will be to handle the external reporting. Before this, we are discussing about the external reporting, which is your income statement and balance sheet. Similarly, if you are cost accountant, you are working on the internal reporting or management reporting. So that time you are working on the profitability analysis, which is of course not part of R2R. That is a separate wing, internal profitability analysis, and very, very important also. But all these reports, everything will be there. How we will get this report? Once the transactions will be posted, the adjustment entries will be there, then the source will be the transaction always. Like once the record will be there in the system, then only we can go for reporting. But before posting the transaction, we should have the master data. Before master data, we should have the backend configurations. And the first point of configuration will be your organization structure. When you will join any company, before like whether they are going for SAP or XYZ, any application, they have their organization structure is very clear. So let's take example of this organization structure. So in this category, what we can see, so we can see that in highest node we have something called operating concern is there. So this operating concern is there, it is required for your profitability report. Okay, so if just have a look into this, if I am going to run one COPA report, now I'm going to run the COPA report. So what I need to set here, or what I need to enter here, you can see set the operating concern. So if you are working on multiple operating concern, if I'm working one, then it is fine, automatically system is going to take. But as I am working on multiple operating concern, so it is asking that which operating concern I need to run. So to run the profitability report, which is internal profitability analysis, first thing I need to set, that is your operating concern. Now don't get confused with this operating concern. Domain point of view, there is nothing called operating concern, but in your organization, if you are not using SAP, some different application you are using, then at internal profitability report also you must be generating. Most of the time companies used to ignore it because it is very difficult to manage manually, but it should be there. So where we are going to understand at micro level our internal profitability status. External your P&L report is going to give you the external report, whereas COPA or profitability, cost and profitability analysis, or comparison between cost and revenue, that is given at micro level, at internal management level, that can be derived through the profitability analysis. So for that purpose I need to set my operating concern, right? So I need to set this is margin analysis, that is in S4 we can say that it is new form, but it is the same. So I selected here operating concern, I selected here the profitability analysis. Now if I will run my report, you can see various data I will get here. And what was the prerequisite? The operating concern, or like you can see so many data I got here. Now this is not your P&L externally. This one is your internal profitability report. Some data you will find, maybe it is there in your income statement, but may not be there. Example, let's say investment, some other investment we did, it is not our operational income, it will be there in the income statement, but it will not be there in our COPA report. So basically the core revenue, the core cost, what we are generating from our operation, and for our operation whatever the expenditure we are recording, those data will be there in the profitability report or in the COPA report. And for that purpose it is mandatory to have your this operating concern. So it is also known as the highest node, and it is very important for the costing people when they are going to work on this particular costing team. Is it linked with R2R? Maybe not directly linked with this, but yeah, costing point of view, it is important. And with reference to this operating concern, we are going to generate the profitability segment. Already you have seen some data related to profitability segment. Next one is coming to the controlling area. So controlling area, again, for calculation of a particular product, the cost, again, it is related to costing, not related to R2R, but it is part of your organization structure. So if I need to understand that how my cost is calculated, okay, so obviously when you will generate your cost, when you will calculate various type of cost, or you will say that this particular product is calculated, all the overheads analysis or overhead management, everything will be done by the controlling area. I'm not going to that into that area segment, otherwise we will deviate from our current topic, but this is part of your costing side, you can say. So controlling area should be there, otherwise we can't do the profitability report analysis, because we can't able to calculate our cost. Cost means, when I'm saying cost, it can be any product related costing, it may be any overheads, anything you can say. So any cost you are going to take costing point of view, then controlling area should be mandatory. Then company code, and it is very important from the finance point of view. If you recall, when I was trying to run my income statement report, so that time one field was there. Let's back. Now you can see this is my company code. So it is mandatory. So why we need the company code, or why this company code is required? Every transaction, financial transactions, everything will be recorded at company code level. Some logistic transactions also will be there. So whether it will be recorded in the company code level? No, logistic transactions will not be recorded at company code level, but with reference to the logistic transactions, integrated accounting documents will be there. If you have already checked my P2P O2 series videos, so where I posted various type of logistic transactions, and you must have noticed that with reference to that logistic transactions, accounting document should be generated, and that accounting document is related to the company code. So you can say that without company code, no operation will be there, because this is our legal entity, and all your profit and loss, balance sheet, everything is generated at company code level. So if I am the finance user, if I am the shareholder, if I am the banker, or I am the government point of view, so then my area of interest will be this report or the company code. Maybe I am not looking into your profitability report or under operating concern, whatever data you are generating, because that is your internal report, but external report point of view, company code is mandatory to have this this data. So that's why company code is mandatory. I mean, everything is mandatory, company code, controlling area, everything is mandatory, but finance point of view, company code should be there. And when you are working on this R2R, you should have the company code. So without company code, there will be no transactions will be recorded, and without transactions, there will be no reporting will be there. Another important one, you can see the chart of account, this one, this particular field. Now, what is the chart of account required? So when we will prepare the trial balance, so you know already that all the closing balance will be there under chart of account. It is not part of organization structure, so that's why it was not there in the PPT. So in this hierarchy, nowhere the chart of account is there. But when you will move towards your general ledger accounting, you will find that chart of account should be there. So without chart of account, there will be no transactions will be posted, no GL master will be created. So you can say that no financial operations possible without this chart of account, right? So what is this chart of account, and who is going to configure it? Of course, anything development configuration will be handled by the consultant. You will get the information, what will be the operational chart of account, what will be your group chart of account, or country specific chart of account, under which chart of account you are going to work, or the report will be generated. So everything, all the informations you will get it, but without knowing the chart of account, how you will crack the interview related to R2R. So that's why you should have the knowledge about the chart of account, but configuration will not come under this profile. It is the development part. So basically we can say that the chart of account should be there whenever I am going to create any GL master, which we will create, or we will discuss today also briefly about that. If I am going to post some transactions, the chart of account should be there. If there will be auto posting with reference to logistic, if you are going to get the accounting document, so chart of account must. Without chart of account, I can't generate any financial report if it is related to GL. So chart of account should be there. So you can say that operation point of view, chart of account should be there. Once the chart of account design, so what is the chart of account? G300. So don't get confused that chart of account and company code is it same. maybe I'm using here the demonstration point of view same character, but conceptually it is different thing. So company code is your entity, so your, let's say your XYZ Limited, that is company code, right? But chart of account, something operation point of view we can create. I'm just using the same character, don't get confused that it is the same thing. It's two different concept, two different thing. One is part of your organization structure, and another one is related to the operation point of view. And here you can see in this diagram that one chart of account can be assigned to multiple company codes. So one operational chart of account we can create. Let's say two entity we have, and within the same country, we are going to follow the same tax rule, we are going to follow the same accounting standard, everything. So instead of creating two chart of account, we can create one chart of account, and that we can link with both the company code, so that whatever the GL masters will be created, so one part we are going to have the common information will be there. So a lot of companies when they are operating in a group, so they used to create one chart of account, and they can use it with multiple company code. So it may be one or it may be multi. Now in interview, if you are getting a question, particularly if we are going for the R2R profile and what is the chart of account, so you can say it is the list of GL accounts. So in one organization, let's say 2000 GL masters are there, so it is part of everything is managed by the chart of account. So who is going to create the chart of account? It is not your area. You will get the information that you are going to work on under which chart of account. It is part of the consulting job, the creation of chart of account. So what you are doing, you are just using the application. Whereas in the backend, some development team or the consultants, they are doing the configuration. Of course, the challenging task will be handled by the consulting team, but again, that will be your next level. Okay, so now you got the idea about the chart of account. Next, coming to GL account group. Now GL account group, again, when we are going to create GL master, which we will also learn in this series. So when, for example, let's say I'm going to create one GL account, let's say equity, shareholders equity. Another GL account is, let's say, salary. So both we can't like compare, or we can treat in the same way. One is related to our equity fund, another one is related to expenditure. Again, we have direct expenditure, indirect expenditure, revenues. So basically, before posting the transactions, we should have one master record should be there. Very often you will find that I'm using a term master record. So master record is nothing but the base record. Before posting the transaction, the master record should be there. If I'm going to post a customer transaction, then customer master should be there. If I'm going to post a GL transaction, GL master should be there. If I'm going to post any supplier related transactions, then supplier. So very simple language, you can say master record is your base record. So before posting the transaction, the base record or the master record should be there. So when you are learning, before posting the journal entry in maybe in your notebook, what you are doing, you are just creating a T form, right? So that is nothing but a master record. If you are going to record the same information in Excel, that is also one master record. If you are going to create this one in the Tally software, let's say, that is also master record. So in Tally you are creating GL master. Same thing in SAP also we are creating the master records. So that is your different type of master records will be there. And who is going to create, again, configuration will be handled by the consulting team, but you will get the information, because when you will create any GL master, you have the knowledge that under which group I am going to create. So basically, who is going to create this GL account group? Consultant. User is going to use it, of course, yes, because when user is going to create the GL master, they should know that under which group they are going to create that particular master record. So if I don't know, like salary, I will create under which group, then obviously I will select a wrong group or error will be there. But even I can't, if I will select a wrong group also, I can't do that, because system is going to restrict me, because in backend we are doing the configuration in that. So even user will try to create a wrong step here, or they will try to do something wrong, system will not allow that. This is the benefit of any advanced application. So GL accounts groups will be there. So in future, when we will create the GL master, we will see different type of GL groups. Of course, the configuration, it is there in the backend, but we will see. Then something, we have the GL account type. Now what is GL account type, where we can see it? So let me show you one GL master so that you will get it. Now you can see here, this is one GL master, the structure of the GL master. So we will see later. We will add one dedicated video on this GL master creation and all its component. But right now you can see this GL master which is created. Now this, is it possible to create a GL master without chart of account? No, not possible. So you have to have, you must have one chart of account before creating the GL master. Now when we will create this GL master, what is my group? I was talking about the GL account group. So here a couple of groups I have created in the backend, so that when user is going to create that particular GL master, they have to select the group. So these are the different groups will be there. So in business already they know that what are the groups they are going to create, or they, so it is not your area of work. they already discussed with the consulting team and they have already configured the GL account group. Your job is when you are going to be part of your R2R process. So that time if you are going to suppose create the GL master, again end users or entry level jobs, they don't have the master data rights. Mostly senior people, they will, the super user or power user, they are going to create master data. But I'm assuming that let's say you are part of master data team. So when you are going to create a GL master, so you will get that information what the group you will select. So if I am going to create the GL account as salary, then I need to select here the group as operating expenditure, which is created by the consultant. If instead of operating expenditure, if I will select fixed asset, then of course error will be there, because in backend we did the configuration. So group, account group, you can say it's a classification of different GL masters. So every GL will be part of one group. Can I keep one GL master in multiple group? That does not make any sense. So one GL account will be part of one group only, right? So and another type you can see here, GL account type, which is basically more technical. So under this GL account type, basically you will find that how we are going to, functionality point of view, we are going to classify our GL masters. One is categorization of GL account, that is we are saying that GL account group. But what purpose we are creating the GL account? So is this a balance sheet account, for example, fixed asset? So if it is fixed asset, then group I will select here as fixed asset. Okay, so it is fixed asset, but what will be the category here? Something else. It will be balance sheet category. Similarly, my group is operating expenditure, but my GL account type is primary cost and revenue. So what is the benefit here? Benefit is whenever I am going to record some transaction with this salary account, it will not only record in the finance point of view, or it will be not part of income statement. This cost, because ultimately salary is our labor cost, so it will be part of my cost of production calculation. So this cost will flow from finance to controlling, so that CO user or costing people, once again they are, for example, let's say you are going to record a salary cost, this monthly expenditure is let's say 1 lakh. So this 100k you are not only going to record in the finance. Again you will pass this information, and costing people, once again they are going to record this 100k in their record. So instead of maintaining two records in integrated application in S4 or in SAP, one transaction will be posted by the finance user. So automatically that cost or that 100k or that 1 lakh total salary for this month, one particular month, it will be recorded in finance record. Of course the GL entry is going to update. I'm not showing all this today because we will see all this in detail. So it is going to record in that particular GL master, and also the cost will flow to our controlling. So I can take this cost to my cost center, I can take this cost to any profitability segment, I can take this cost to any sort living object like internal order. So practically all these things we will see. We will post various type of transactions, we will see how this finance document will be there or CO documents. So all this information one by one we will see. Okay, so I'm just giving an overview, and till now we have completed in this segment what we understood till now. So we understood the how this P&L balance sheet will be there, all the components. So one by one each component we are going to explore. So basically this accounts receivable is part of O2C, vendor this part is your P2P, bank also will be there, asset accounting will be there, already we have seen that one component in our balance sheet, and general ledger accounting is also there. So these are our sub modules. This receivable, your payable, your bank, your asset, these are different sub modules, and like we have the general ledger accounting, that is also another sub module. Once everything will be integrated with each other, then that we are saying that it is R2R, simple language. So record to report. Okay, so GL type also I have given some idea. So here you will find different type of your GL account types are there. So basically 5 different GL account types we will see here, and as when you are going to create your GL master, so appropriate type you will get. Next question, how you will get the right answer, like which GL account type you will select. If instead of primary cost, if I will select non-operating, is there any error? 100% error will be there. So that's why when we will create or when we will learn the master data, so that time each component we will see in detail what is the functional impact of selecting a particular GL account type. Coming to the next one, reconciliation account. So very often you will find that we are going to do the reconciliation between two parts, right? So let's take another example. So this is our balance sheet, and in this component, if I will see my accounts receivable, right? So this account receivable, now accounts receivable is showing what is my balance here. So the balance is showing that 22,924.56. So if I will check, this is my receivable balance, the trade receivables, right? If I will run my customer report on a particular date, and here also exactly the same, showing the same. So you can see here 22,924.56, it's showing here, and same information is available also here, right? This is what actually we are doing. Now it is not one transactions, there are so many transactions. This GL balance, what we can see here, it is not one transaction, so we will have millions of records will be there. And again, if we'll try to find out the source, for example, if I will try to find out this particular document, so this document where we recorded, again this document is not recorded in the finance, the original document was posted in the SD. So this is because of integration with reference to this sales document, we got the accounting document, and as a result we got the update here. So when you are going to be part of your accounts receivable, so that time customer data is very important for you. What is the receivable balance, what is received, aging report, all this activity you are going to do when, if you are working as a part of O2C or accounts receivable team. But when we are part of your R2R, so that time it is very important that whether all the data is reconciled or not. So basically here I am trying to see whatever my trade receivable is showing in balance sheet, same information is there in my reconciliation account or not, or in this particular GL or not. So that's why here we are going to consider two terms. One will be your subledger, so those are your customers, your suppliers, your asset, those are subledger. So when the transactions will be recorded, the transactions will be recorded with the supplier. Now here in this particular, the GL account number is, what is the GL account number? The GL account number is, here it is showing that 3000, right? This is my 3000, or the GL account balance. Can you see here 3000? No, it's 23. So 23 is what? 23 is customer. So 23 is my subledger, and whenever I posted the transaction, whenever there is a sales, some sales activity happen with this particular customer, so automatically my accounting document generated with this customer 23, simultaneously I also got another view, that is my 3000. So account receivable updated. It is part of your integrations. It is part of your reconciliation between GL and subledger. So normally if these functionalities are not happening, then what user is going to do, when the end of the period, it may be monthly or maybe quarterly or maybe yearly, they will take all the line informations, the transaction information related to customers, related to vendor, they will do all the consolidation there, then final result will be shown in the balance sheet. Because in balance sheet, maybe you have hundreds of lines are there, different transactions. In balance sheet, you are not showing 100 lines. In balance sheet, you are just showing one figure, that this is our receivable balance. But how we got it? For that, we have to spend 1 week to do all the consolidation. What is the amount received, what is due, whatever advance we have received. Once all this activity will be done, then finally we can say that our trial balance prepared, now we can proceed with the balance sheet. But with ERP or with SAP, no need to do anything. User is just going to post a transaction immediately with this reconciliation process, your reconciliation account updated, and same is going to updated in the balance sheet. So that's why very often you will find that it is reconciled or reconciliation is going on, month end activity is what is the use of reconciliation, or how we are doing this reconciliation in month end. So all these things will be part of this your R2R. So nowhere in the O2C or P2P you will find that reconciliation is going on. Reconciliation always you will find in under R2R. Okay, so we will stop it here. In the next video, from this point we will continue.